Welcome to part 5 of the free course series. I'm QC Lee, the founder of the Motivated Trading Company. Now, in the last video, you learned exactly how to set up and use your brokerage to start trading. Now, in this video, you're gonna learn everything you need to know and more about candlesticks. So without further ado, let's begin. In this video, you're gonna learn the absolute best candlestick patterns, and not only that, but how to use them in real time. And make sure you stay till the end, because I'm gonna drop some free game and some free strategies that have made me a lot of money, and they can make you a lot of money too, as long as you use them right. Now, for y'all who don't know, I am QC Lee, the founder and owner of the Motivated Trading Company. And without further ado, let's go ahead and get into it, okay? Candlesticks 101, baby. All right, what is a candlestick, okay? A candlestick is basically just a visual representation of price action for a set time period, which you'll be able to choose. Now, an example of this would be the daily chart. You know, when you're on TradingView, D will stand for daily chart, which I'll show and make a video on too. But each candlestick will be 1 day of price action, okay? So when you're looking at a time frame, whatever that time frame is represents 1 candle. So D for daily, 1 day equals 1 candlestick of price action, okay? If you're on the 5-minute time frame, each candlestick is 5 minutes. If you're on the 1 hour, each candlestick is 1 hour, and vice versa. I'm sure I don't need to continue. Super simple. Keep watching, because I'm gonna show you some examples in real time about how this works. Now, let's continue. Okay, candlesticks, here's what they look like. They look like what? Candlesticks, okay? They look like candlesticks, because they are. Now, okay, each candlestick has a body and a wick, usually. Now, the wick is where price reached, but it couldn't stay there, okay? The body is just between the open price and the closed price. So focus on this bullish candlestick with me for 1 second right now. Let's just play out how the price action moved in this candlestick, okay? Now, let's call this a 5-minute candlestick, all right? Now, it opened right here on the bottom. Let's say price action moved up the first 2 or 3 minutes, got to right here. Then maybe it fell down here, fell down right here, all right? But buyers were like, nah, not today, not in my house. And they pushed it back up, okay? So it keeps going up, We're like, yay. Oh yeah, price is going up, yay. Goes all the way up here to the high. But sellers are like, not in my house either, okay? So sellers push it back down to the close, all within that 5 minutes. So I hope that gave you a better representation of what it is. The wicks are literally just where price reached while that candle was active, but price could not stay there because there was too much buying or selling pressure. Now, the body is just between the open price and the closed price. Now, we're gonna use the body and the wicks for different things, so make sure you stay to find out how we use them to the best abilities. Now, vice versa for a bearish candlestick, okay? Opens here, got pushed up right here maybe a little bit, okay? Sellers were like, not in my house. Once again, push it all the way back down here, push it all the way back down to the low, but then buyers were like, all right, you're a little bit too close. You're in my house now. Push it up a little bit, ended up closing here, okay? That's what happened. I'm gonna show you some more of this in real time, so stay with me. If you're confused, don't worry. Probably gonna answer all the questions you have. Now, let's continue. Long versus short candlesticks. As you can probably guess, the length of the candlestick, especially the body and the wick, it matters. Now, long green candles show strong buying pressure. To see strong buying pressure, you wanna see candles like this with long bodies. Okay, I'm gonna show you what the wicks mean later, so stay tuned, all right? But for strong buying pressure, you wanna see long green candlesticks, okay? Why is that the case? Because buyers were able to move price drastically, okay? If the buyers were able to move it from 200 to 210 in 1 candlestick, okay, whatever time frame you're looking at, and it's a nice big fat body on that candlestick, okay, that is strong buying pressure because buyers were able to move it and buyers were able to make it stay there, okay? Now, vice versa for long red candles. Long red candles show strong selling pressure. Why is that? Because sellers were able to push price down a drastic amount and keep it down there, okay? Now, vice versa for short candles. Short green candles right here, when you see those short bodies, all right, that shows weaker buying pressure. When the whole candle is short, this will show weaker buying pressure, okay? Now, short red candles are gonna show weaker selling pressure, all right? So it's just vice versa. It's just switched around. This is not confusing, so don't overthink it. It's not a trick or anything like that. Long green candles, lots of buying pressure. Long red candles, lots of selling pressure, and vice versa for shorter candles. Now, hope you understand that.
If you don't, shoot me a question, shoot me whatever. If I'm doing good, give me a like, give me a subscribe. If I'm doing bad, tell me in the comments, Now, let's continue. Candlestick patterns. Look at all these candlestick patterns. Now we're about to get into the juicy stuff right here, okay? Glad you made it this far. Now, look at all these candlestick patterns. There's so many of them. There's all these traders out here just, mix them all up and this and that. The only reason I put this here was to tell you that we don't use the majority. We don't even use 90% of these candlestick patterns, okay? Not even. So I just put this here to let you guys know that there is a lot of stuff out there that you don't need to know, that it's just going to overcrowd your brain. There's just no reason for you to know it. I put this here solely for educational purposes to show you guys that, yeah, whenever you look up on Google candlestick patterns, you'll see maybe 30, 50, 100 of them, but you only use select ones, which again is why you need a mentor in a community when you're trading, okay? I wish I had this when I was starting. I had to figure it out the hard way, but you don't. Now, let's get into it. All right, let me move myself out the way, even though I look so good or whatever. Now, the Pinbar candlestick pattern. This is one of my favorites. It's made me a ton of money and my team. So without further ado, let's go ahead and explain it, okay? This is a reversal candlestick pattern that forms after a trend. It can form after an uptrend, after a downtrend. It does not matter. Now, when combined with other factors, this is a powerful pattern, okay, especially on higher time frames. Now, let's just be really clear. I only really use candlestick patterns on higher time frames, like the 4-hour, the daily, and the weekly, okay? And I always combine them with other factors, which you're about to see. So stay till we only got a few slides left till I'm gonna show you, that good, juicy strategies. You just gotta learn this real quick. Now, this is a bullish pin bar, all right? Why is it called a pin bar? Because it looks like a pin. The little top of the pin that make sure it doesn't poke you. That's the top, all right? Now, a pin bar candlestick pattern is where the majority of the candlestick is a wick and the majority of the body of the candlestick is either more to the top or more to the bottom. Here's some great examples, okay? Now, why is this a candlestick pattern? Let's explain, okay? Because price, even though price got pushed all the way down to this bottom here, buyers are so strong, okay? Buyers are so strong that they were able to push it all the way back up here and keep it here, okay? So this shows extremely strong buying or selling pressure. Now, vice versa for the sellers, all right? Buyers push it all the way up here to this high, but sellers, again, they're like, not my house, bro. Can't do that up in here now, all right? So they push it all the way back down, showing super strong, super strong, selling pressure and buying pressure. Imagine this like Mike Tyson versus the super scrawny dude who's way under his weight class. Imagine a heavyweight versus a flyweight in a fight. This is exactly what's going on here. The buyers in here is the heavyweight because they're just destroying the sellers, and the sellers here is the heavyweight. All right, Mike Tyson is throwing crazy hooks right here. Imagine that. All right, it's always a battle. Price action is always a war. It's always a battle. Imagine price action moving as a boxing match, all right? In this boxing match, you see who won, all right? Buyers won here, all right? Buyers are Mike Tyson here, and now sellers are Mike Tyson here, all right? Now, let's continue. Engulfing candlestick pattern. All right, this is another reversal candlestick pattern formed by two candlesticks, where the first candle is engulfed by the second, meaning the second candle had higher highs and lower lows than the first candle, all right? I'm gonna show you guys this, so don't get it twisted, and I'll show you also an indicator to use that's gonna literally tell you what type of candle it is, if it's engulfing, if it's the next one I'm gonna show you, or if it's just a normal continuation one. So stay tuned. I got lots of free games for y'all. Anyway, the second candle must be the opposite color, all right? So I know some traders that don't go by the opposite color rule, but I want y'all to have the highest probability trades ever. So I want y'all to abide by this for now. Now, look here, all right? We have a downtrend, and then we have in the engulfing candle. You see the higher high right here, the higher high and the lower low, and then we see a reversal. The same thing. These are usually in the same spot as pin bars. All of these patterns that I'm going to show you guys are reversal patterns. You don't even need to use candlestick patterns for continuation. I just showed you how to spot momentum. I just showed you how to spot, strong and weak buying pressure. So anyway, you guys get the point. Anyway, look, we have an uptrend, and then we see this big red candle with higher highs and lower lows, and now it goes down. That's what it's gonna look like. Now, you're gonna see a real live example very soon. All right, last one. Now, this is literally just the opposite of the engulfing pattern. Don't overthink it, okay? This is a reversal pattern formed by two candlesticks candlesticks where the first candle engulfs the second. All right, remember that engulfing is the second candle engulfs the first. So this one's the opposite. So don't overthink it, don't stress it. We see this, just look at these images, screenshot them if you want. Look at these images. All right, we got this one with higher highs, higher lows, and now this one has lower lows, or no, not lower lows, has high, it's just smaller. All right, I'm not even gonna do all that higher low, lower low, whatever. It's just smaller. It just fits in it, like Pac-Man. Y'all ever played Pac-Man? It's just boom, 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 boom. It fits in it. The first candle is able to eat the second candle entirely. I'm not gonna overcomplicate this stuff like some of these guys out here. It's just smaller in every way. That's it. Now we see it going up. Boom. We get the bearish Harami candle. We see that this high doesn't go over or is not equal to this high, and this low does not go over and is not lower than this low. Same thing happens here. This one's bigger. This is the Pac-Man, and it's able to fully eat this green candle. Then we get a reversal. All right. I hope you guys understand those. If you don't already, don't sweat it. I'm gonna show you even more. Now, let's see some real life examples, baby. Let's go. Okay, everybody's hyped because now they're really gonna get some free. You thought you got some game already? About to get some real game, man. Let's get it. All right, I'm gonna exit this, pause the video, and try and guess which candlestick pattern that we're about to show you first. All right. I'm gonna act like you already got it right. Let's continue. What do we see here? All right, what do we see here on price action? Woohoo! I think I know what I see. A pin bar candle. In fact, there's multiple on this chart, but I'm not going to confuse you too much. Let me just zoom in a little bit here. Maybe you see it, maybe you don't yet, but I'm going to zoom in a little bit, and I'm going to move my fine self over down here. Now, we see it right here. Here is the pin bar candlestick. Now, I told you that we combine these things with other factors. Okay, we can never just use one thing to enter a trade. All right, it's not how it works. So, what did I use to enter this trade? What would I use to enter this trade? First of all, we get that pin bar candlestick. Boom, huge. Remember I told you, look, price action went all the way up to this support or this resistance. It was a support. Look. This was a support because we got one bounce. We got two bounce. We got a close. We got another bounce. Two more closes, all right? This one broke through that time, but it's okay. Now, this is a resistance here, all right? We got a rejection of a huge resistance, number one. Number two, we got the pin bar candlestick, okay? Now, number three, even if you didn't want to enter right when this broke, because here's how we play these. Let me zoom in, make sure y'all know exactly how to play these, all right? Here's the pin bar candlestick, okay? So as soon as price breaks below this pin bar candlestick, that's how you know to get in. So like once price was like right here, you could get in. But if you want even more confirmation, if you want it even better, you can wait. Here, let me zoom back in. Let me get some more for y'all. You can wait till price crossed under this 200 EMA because that's always a huge level, okay? So we got three things going for us on this trade. Boom, we got pin bar candlestick. Boom, we got rejection of the huge resistance. Boom, then the next day right after, or 2 days after, we get the cross and hold under the 200 EMA. And as you see, right after it crossed under that EMA, and we got these patterns going for us, but you just went tanked. This would be hundreds of % in profit. Like you got like a 1 month put, maybe 1,000% even. This play would have been insane, okay? Now, this is a pin bar candlestick. Now you know how to use them. There's another one up here too, which is even like a little double top pattern, but I'm not gonna confuse you guys a little too much on it. But look at this. Went up, pin bar, back down, and then all the way down again. This stuff is crucial. I'm telling y'all, I didn't even see this before. Like I just went to the chart and seen it. But if you can learn to see these, if you can learn to use these pin bar candlesticks, you can really make a lot of money. Like I'm not telling y'all this for no reason. Now, let's move on to the next candlestick. All right, we got the snow chart up here. We're about to explain and get into a real life example of the Harami candlestick. Now, pause the video, see if you can spot it before I can, and let's get into it. All right, now, here it is. Now, remember, it's like Pac-Man, okay? So the first candle got to be able to eat the second candle because it's a Harami pattern, and engulfing's the other way around. I'm going to show you the engulfing next, so stay tuned. This candle's high is right here. This candle's low is right here. Now we get this candle right here. All right, let me zoom in just a little bit more. Look, this candle's low and this candle's high. It's just smaller. I remember I said I'm not gonna confuse you. It's just smaller in every way. That's it. It's just smaller, okay? The high is shorter and the low is higher. It's shorter. It's like Pac-Man. It's got to eat it, you know? Boom. Now, how do we play this trade? Now, there's two ways. You can play it after price gets above this point. After price gets above the top of the Harami candle, indicating the reversal, then you can enter calls. Or you can wait until it gets to the top of the candle that came before it that was eating it, the Pac-Man candle. candle, okay? So in this instance, you could have done either and made money because price went up regardless, as we can see. So boom, down, and the 200 EMA is right here again, and we got good volume once again, okay? Yeah, look, this volume is bigger than we got in the past, like biggest green volume we got since when is this? January, okay? So that's a huge factor for us here. So I honestly would have entered as soon as we got the break of that Harami candle, personally. But it's all up to your risk tolerance. But you can enter here once it breaks out, or you can enter right there. And then we see it go up above the 200 EMA. And then once again, like I showed y'all with the last one, once it goes above that 200 EMA, she gone, bruh. She gone. Look. Up, 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 up. This is a cool 500 to 700% play if you play the right time and you play the right contracts, okay? Which we do, baby. Now, this is a great example of a Harami. Now, without further ado, let's go to the final one. Now we're on the 4-hour chart, all right? Tesla, baby. What do you see? Engulfing. This is an engulfing candlestick. Remember, now, this one, an engulfing candlestick, is where the second candle is Pac-Man, where it's gonna eat the first candle like this, okay? It's way bigger, all right? It's engulfing it, okay? Now, before I go deep into this, I'm gonna show y'all what these numbers mean, okay? I told you if you stay to the end, you get more free game, man. More free game for real. All right. Called the strat. It's an indicator. All right. Now, 1 means it's a Harami candle. 1 means that the candle's smaller. 2 means it's a regular continuation. 3 means that it's an engulfing candle. All right. Now, if you want to get this on your chart, you just want to type in strat. Candle type the strat. You're going to pick that one right there. I have it favorited, so it's going to come up. And then after that, you're good. You're going to see 1, 2, 3 on all your candlesticks. You're going to know that 1 is a Harami. You're going to know that 3 is going to be an engulfing. But remember, you only want to take them at reversal spots, at the top and bottoms of trends and stuff like that. Now, let's get into this one. Here we go. We see this big candle, okay? This is definitely a resistance here at 265. So number 1, we get a rejection of the big resistance at a psychological key level, 265. Then we get the big engulfing candle down. We get a cross under the 8 EMA. We get some decent red volume here compared to, the rest of the price action behind it. Then we get an EMA cross a few days later on the retest. So even if you didn't want to play the breakout of here, so here's how you play the engulfing. Once price gets past here, that's the official way to play it. Or you can get it right here. Again, all depends on your risk tolerance. You can play the breakout of the engulfing candle itself, or you can just play it as it's becoming an engulfing candle, okay? I recommend playing the latter, this one, when it gets here, okay? Then you can write it down, down, down. We get another EMA cross, even more confirmation. Down, 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 down. This thing just, when does it stop? When does it stop? Ooh, that was a lot of price action. I don't even know what type of profits that you'd make if you took that play. Thousands of percent. Well, I hope you learned something. Now, if you did, give me a like, give me a subscribe. I got lots of more free game coming, so you don't want to miss it. Subscribe to the channel, turn post notifications on, and if you want to join the Discord and get earning and learning with us, I'll drop that link in the description too. Now, I'm out, baby.